Universal owner. It's Friday, June 19th, Juneteenth, and US markets are closed today. This morning we're talking about the most important mispricing in institutional capital right now. The gap between what AI is demanding from the power grid and what the power grid can actually deliver. Hyperscalers are spending $700 billion on AI infrastructure this year alone, 5 times the level of 5 years ago. Every dollar of that capital makes the same demand, reliable grid-scale power. The problem is the grid isn't there yet, and the companies that would close that gap are trading at valuations last seen in the global financial crisis. That's the story. Let's build it out. Here's the number that matters. 49 gigawatts. The Lawrence Berkeley National Laboratory projects U.S. data center electricity demand at 74 gigawatts by 2028. Today, only around 25 gigawatts of that is covered by permitted interconnected capacity. That 49 gigawatt gap is not primarily a generation problem. The US has enough power plants in planning. It's a permitting problem, an interconnection queue problem, and a transmission problem. Regional transmission operators are reporting average queue backlogs of 4 to 5 years. Permitting for new high-voltage transmission lines runs 6 to 12 years in most U.S. jurisdictions. The AI build-out runs on a 2-year deployment cycle. You can see the mismatch. What makes this interesting for a universal owner is what's happened to the companies that would close this gap. Listed infrastructure equities, power generators, grid operators, transmission companies are trading at EV to EBITDA multiples not seen since 2009. Private infrastructure funds are pricing the same underlying exposure at roughly 3 times listed market valuations. 3 times. Same asset. Different market. That's a market structure observation, not just a relative value trade. Meanwhile, across the Pacific, a slow-motion repositioning is underway that will shape bond markets for the rest of the decade. Asian central banks and sovereign wealth funds hold approximately $7.5 trillion in US-denominated assets. The answer arriving in 2026 is, carefully, through diversification, not liquidation, into European sovereign debt, regional infrastructure, and alternative reserve assets including gold. The Wash Fed removing forward guidance raises duration uncertainty for the largest fixed-income book on Earth. U.S. fiscal deficits at current levels pressure long-run dollar credibility, and there's a structural push within Asia to develop regional capital markets that reduce dependence on New York settlement infrastructure. For a universal owner outside Asia, the historically reliable bid for long-dated U.S. treasuries is becoming less reliable at the margin. That's a regime change worth pricing over a 20-year liability horizon. One more story before we close. Private credit has bifurcated. Institutional allocators, pension funds, insurers, endowments are holding or adding to their private credit positions. Retail vehicles are seeing net outflows for the second consecutive quarter. The risk for institutional allocators isn't direct contagion. Their structures are different. Their counterparty set is mostly non-overlapping. The risk is indirect. As retail flows slow, some direct lenders will need to reduce deployment, tightening credit availability, and widening spreads in middle market lending. That creates opportunity for the well-capitalized institutional lender with dry powder. Private credit is maturing as an asset class. The divergence is a sorting mechanism, not a crisis. Today's episode is brought to you by universalassetowners.com, where you can run the AI power grid crunch scenario yourself. Use the allocator peer positioning benchmark to see where your book sits against your peer cohort, and access 12 free research tools built for institutional allocators. No login required. Links in the show notes. Before we go, a word about our sister show. The Allocator class is the Universal Asset Owners Profile series on the people shaping the world's largest pools of long-term capital, the chief investment officers, fund chiefs, and capital stewards who decide how trillions are invested. Each week, one deeply researched portrait of a leader who matters. Find the Allocator class wherever you get your podcasts, or at universalassetowners.com. That's the Universal Owner for today. Juneteenth, June 19, 2026. 3 stories. The 49 gigawatt gap between AI demand and grid capacity. Asia repositioning $7.5 trillion of U.S. exposure. And private credit sorting the institutional players from the retail wrappers. U.S. markets are closed today, which makes it an unusually good day to think rather than trade. The AI power grid crunch scenario is live at universalassettowners.com/scenario lab. The peer positioning benchmark is at universalassettowners.com/peer positioning benchmark. Both are free. We're back Monday. Have a good long weekend.